Ladies and gentlemen, good day and welcome to the POWERMECH Project Limited Q2 FY21 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chirag Machala from Nirmal Bang Equities. Thank you and over to you, sir.
Thank you. Nirmal Bang Equities welcomes you all to the Q2 FY21 results conference call of POWERMECH Projects Limited. The management is represented by Mr. S.K. Ramaiah, Director, Business Development, and Mr. J. Satish, CFO. I now hand over the call to the management for their opening remarks, post which we can take questions from participants. Over to you, sir.
Yeah, thanks, Chirag. This is Satish here. Good afternoon all, and happy to host the earnings call for Q and H1 2021. We will take few minutes to update on recent developments, and thereafter we can go for your questions. The performance for Q2 and H1 is exceptional in nature in the history of POWERMECH journey. As you all know, the impact of COVID continued on POWERMECH performance. Various challenges are seen across globe at multiple projects. As manpower base is large for POWERMECH, execution demanded lot of planning and also safety while executing the projects. In spite of lot of planning, had challenges in last few months. However, we can confidently say that worst is getting over for POWERMECH, and lot of experience been gained how to work along with COVID. So things are getting implemented. Now things are steadily improving and we can see developments happening all the fronts. Hoping Q4 will be completely a normal quarter in the journey of POWERMECH. The reported total income for Q2 FY 2021 is rupees 347.55 crores. And the Ebitda is 40.49 crores negative. And the reported PAT is 51.80 crores negative. Whereas if you see Q2 of last financial year, the total income was rupees 535.45 crores. And the reported Ebitda was 71.14 crores and the PAT was 35.1 crores. And the revenue mix for Q2 is as follows. Erection business has contributed 87 crores plus, civil around 100.78 crores, operation and maintenance close to 145.85 crores, and the electrical business has added 10.59 crores, and other income close to 2.6 crores. And the revenue is almost short by 187.9 crores as compared to last year. And if you see like the mechanical business, which we have done 87.873 crores, whereas last year we did close to 181.68 crores. And the civil we did last year around 146 crores. O&M contributed almost 170 crores and electrical was 34 crores. So there has been dip across all the segments. Similarly, for the reported total income for H1 FY 2021 is 624.4 crores and the reported PAT is 52.550 negative and the reported Ebitda is 52.5 crores negative and the PAT is 84.30 crores negative. Similarly, if you see last year H1, the reported total income was 1,028 crores and the EBITDA was 137 crores and the PAT was almost like 63.5 crores. And in terms of segmental contribution, erection we did close to 147.5 crores, whereas last year we did close to 358 crores. And civil it was 174, whereas last year it is 281. And O&M 260 crores, 266, whereas last year it was almost like 311 crores. And electrical it's hardly 31 crores, whereas last year it was 70.7 crores. There is significant fall in reported total income during the quarter and half year ended as compared to last year. In spite of having strong order book on hand, the execution cycle got impacted adversely due to COVID. Impact is seen across all the projects. The revenue shortfall is mainly on account of lockdown as well as COVID related issues. Substantial dip is seen in mechanical, civil and electrical segment. The overall execution cycle as compared to Q1, Q2 last year, the cycle has improved from 56% to 65% as compared to Q1 to Q2. And if you see the O&M business, that is more or less was intact except for the shutdown work because the customer did not allow to work because of the COVID restrictions. So O&M business operated at 86% level during Q2, whereas in Q1 it was almost like 85%. There is improvement. And this is expected to go up by Q3 to 96 or 95%. Maybe by Q4 it is expected to 100% level. Similarly, if you exclude O&M business, the other part we could able to operate at 55 to 60% level, whereas in Q1 it was close to 45%. So there has been improvement, and Q3 we're expecting this should touch to 90%, and Q4 may be normal. But if you see the overall execution level, we did close to 65% to 70%. There has been improvement close to 26% as compared to Q1, whereas Q1 we did close to 56% of the last year performance. And this is expected to go to 90% execution level by Q3, and maybe Q4 it's going to be 100%, which is normal. In terms of performance, yes, there is improvement. In O&M, it has gone by 21%. And if we exclude O&M and we see the performance, it has gone almost like 30%. And this is expected to go by 40% by next quarter. The major projects impacted include like projects like Maitri, which is based in Bangladesh. We have close to 840 crores of order book there. We have seen major challenges in terms of mobilizing the manpower, labor, visa expenses, transportation. Similarly, we had similar challenges in Kalesaram project in Ramanpet, Bhusawal, Maharashtra, and also some of the cross-country pipeline works in Maharashtra and Gujarat. Though the company remobilized various sites, challenges were seen at all various projects, post-mobilization like quarantining the staff on account of COVID, extra safety measures imposed by the customers, managing the migrant labor, movement of labor. These are the challenges which we have never come across. So these all, we could say like non-recurring in nature. Of course, now we have learned how to work with COVID. Maybe things may not be more difficult as it used to be last 4 or 5 months. Similarly, as you have seen, like the reported EBITDA and PAT, it got substantially suppressed because of the execution cycle was slow. So the major reasons which attributed this downfall is like the idle manpower cost. In spite of required execution, we ended up with paying the manpower because the manpower base in POWERMECH is quite strong and it's large. So the idle manpower cost attributed a large expense for POWERMECH. On top of that, visa expenses like international projects. During COVID time, lockdown imposed and manpower has to be removed from the site because of the so many issues, and those side manpower we have taken remobilized. That added lot of cost in terms of visa expenses, traveling, transportation cost on account of mobilization, and lot of safety measures are taken at various sites, so that added additional cost. Of course, these are going to be non-recurring. The company has deployed the resources during quarter 2 to the normal level, including the manpower, equipment, materials, etc. However, various challenges continued across sites in execution. POWERMECH has large employees base working across globe in spite of all best efforts in reduction of the cost. Had less flexibility for controlling complete manpower cost. Moreover, majority of our subcontractors cost include manpower cost. This some extent cost. There is substantial reduction in operational cost with dip in revenue generation in terms of absolute numbers like staff cost, admin expenses, etc. as compared to immediate preceding quarter Q4 FY19-20. There is also a small dip in the depreciation cost because not much capex has been spent. Finance cost, of course, quarter 1 it continued to be higher. Quarter 2 it's more or less in line with quarter 2 because lot of measures been taken to control the finance cost. Comparatively, as compared to last year Q1 and Q2 is a bit high, but however, things are controlled now. It is going to be a decreasing trend with the decrease of the debt. The company has spent additional cost toward 8 tickets, traveling, mobilization. These are going to be non-recurring and exceptional one-time item cost. Moving to the balance sheet items, the receivables stands at 430 crores, whereas it was 542 crores as of 31st March 2020. Inventory level continued to be at 120 crores and retention money continued to be at 300 crores, more or less in line with 31st March numbers. One of the good development is like the peak borrowing of the company went up to 590 crores due to delayed receipts from customers, and the peak net borrowing went up to 460 crores. However, as on today, the gross debt level 590 crores to 550 crores, and the net debt level has come down from 460 crores to 380 crores. This is substantial reduction during this difficult environment, and we are hoping this should further come down. Today, we have got close to 170 crores of deposits with the bank. So we have kept some sort of contingency liquidity with the company to take care of the growth as well as unforeseen events. So this gives a lot of confidence for our execution because liquidity is very important in this unseen environment. And one of the positive development is the company has generated positive cash flow from operation during this tough time, and we are expecting this to continue. By year end, it's going to be positive as far as the operational cash flow is concerned. So this will help us in terms of reduction of debt. And as you all know, the company has not availed any moratorium from any of the banks during this difficult time. Despite many challenges and tough times, we could able to source very good quality orders beyond our target. We added close to 2,836 crores of orders, and as you all know, during last year we did close to 1,950 crores. So this is a strong front and strong base for our execution for next 3 years, and we have another 5 months to go. We're expecting comfortably to add 1,500 to 1,600 crores, including the orders which are at very advanced stage. If all things goes, we may start disclosing some of the big orders maybe next 30 days. Order backlog of 6,792 crores. The company is comfortably improving the turnover conversion, now from 170 to 220 crores per month under the normal circumstances. The execution level is expected to improve gradually to 220-230 crores per month. That is what our target, and we are hopeful of doing this. Now I request Mr. Kodan Ramaya sir to add few more developments.
Yeah, thanks Satish and thanks Chirag. Thanks to everybody. Good afternoon. In continuation of what Satish has given his pitch on the various aspects of the company's operations up to Q1 and Q2. On the business development side and the marketing side, as he rightly said, even though we had a blank order book position in the first quarter, but Q2 has been exceptionally good of the 2,836 crores of order booking. That has propelled the backlog of the orders to 6,791 crores. And the salient feature has been the growth in the ETC segment, the mechanical works by 20%, taking into account the backlog, the conversion Q2 also. The O&M around 262 crores. Now, after the conversion improvement in the second quarter, it stands at the same level, more or less same level as per the backlog we had in the end of the last year, March 2020. Electrical, there has been a reduction in the backlog by about 10% to 266 crores. Civil, there is a drastic improvement from 1,227 crores to 3,070 crores, about 45% increase. Sorry, they were total back, this one. The point is that how we are going to go from here afterwards. The challenge for the company is obviously to put more people on the job and find the necessary resources, additional resources, and bringing back the manpower. In fact, as Satish has rightly said, the 85% of the resource management has happened. The second quarter end will further go up. In fact, today, the indirect employees or the workers, the strength has gone up to 15,000, and maybe it is away by 1,000 to 2,000 away from the peak strength what we used to have pre-COVID level. That should give us the confidence. Q3 and Q4, the projects of achieving 90% and 100% of our target should be possible. Now coming to some of the developments, in fact, the order flow continues to be quite good to us, and we have to pick and choose the orders and also the customers. Particularly, we expect major inflow of orders into O&M sector, which is very key for us. Recently, two major orders have been clinched with the Bara 3 into 660 megawatt, 100 crores, and then a major diversification to Tata Steel, Bhushan Steel, old Bhushan Steel works in a non-power sector for 70 crores. Then Chhabra transmission distribution substation work about 70 crores we have taken recently. And JSW Steel, we have added another 63 crores to our total order book of 330 crores there, both at Dolvi and Vijayanagar steel plants. Now, the focus had been more of domestic sector than the international sector. The power to non-power ratio has been now 60% is on the power sector, including O&M, ETC business, and non-power is about 40%. And domestic sector, the backlog is 5,596 crores, 82.4% of the total backlog of the order, and the international position is 17.64, so about 1,200 crores. Now, what we expect down the line is that, in fact, we should, looking at the March and the next two quarters, and some of the opportunities which will fructify in non-power sector, in the O&M sector, in the ETC business, perhaps, plus 2,000 crores of orders should not be an exaggeration. It is in the horizon because many of them are in the final stages of closing it or in the L1 position. And that should help us to propel the total order backlog to almost 8,000 crores by end of the year. Now, the major feature of this improvement in the order backlog should be on the O&M business. In fact, we expect the O&M backlog should almost reach 1,700 to 1,800 crores, and the ETC business to increase by about 35 to 40%. And the civil, there is going to be substantial increase with the recent orders we have taken in the road sector, about 1,100 crores, and also a major project we are looking at drinking water distribution in the UP state. For expecting the normal conversion in the next 2 quarters, quarter 3 and quarter 4, based on the budget projections, perhaps the backlog of 8,000 to 8,500 crores is not is achievable, and that is where the company has to position how to focus more on the conversion and profitability and utilization of the assets. That should be the major focus. Now, coming to some of the major works, what we are executing is that it is now in the pipeline. Maitri, we are doing 860 crores. About 25% of the work has been completed in Bangladesh. There was disruption, and now it is coming back to normal. Yadadri, Telangana, this has been a major thrust in the first 2 quarters. Nearly 800 crores of orders were booked in the civil, structural, and mechanical jobs. We have completed 12%. Now the work is in full progress, and a lot of resources are available, and is more near to Hyderabad. That is helping us to focus it and get better output and resource management in that particular site. Bhusawal, 280 crores structural work, 40% work has been completed. Buxar, new order we have taken from L&T in Bihar state, 176 crores. We have just commenced the mobilization. And then Dangote job is going on very well, $76 million for the EIL through the Dangote refineries. Almost 65% of the work has been completed. And then JSW, Ballari and Dolvi together 400 crores. We have completed 40% of the work. And then the new orders we have to execute, which comes in the piping side. And then cross-country pipelines, about 60% of the work have been completed. Now, taking into these aspects, hoping that normalization is restoring fast, and particularly the manpower deployment will come back to the pre-COVID level. We have to perhaps look for more additional manpower by end of 4th quarter to see that the new order backlog conversion takes place and new resources are mobilized for that. And that is a challenge for the company. And perhaps in these the conversions, we should improve the top line and also the bottom line. Thank you very much.
Thank you.
Yeah. Chirag, now you can have this question session now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Parth Kotak from Keynote Capital. Please go ahead.
Hello.
Yes, sir.
Yeah.
Mr. Parth Kotak, you may go ahead with the question.
You have already mentioned in your comment that you will reach the 230 crores execution per month by the end of Q4. So let's say that you achieve, as you said at the end of your comment, that at the end of the year you would be probably looking to add more labor. Let's say you achieve that target as well. What should be your top line target for the next 2 to 3 years, annual top line target?
For Q3 has almost expected to be in the range of 85 to 90% of last year, and maybe Q4 will be a completely normal quarter for us, because now the deployment of manpower is quite important seeing the local condition. Now, what is important is if you see our backlog order book to the conversion, it always used to be 40% plus. And the backlog, if you take 4,000 to 4,500 crores, the conversion rate always used to be 2,000 crores plus. And we are expecting the backlogs going to be 7,000 to 7,500 plus by year end. If I take 35% conversion also, it's going to be large growth. So I see 2020 as a very comfortable number per month, which is going to be substantial. It may go up.
Okay. I think I get a fair level of understanding. Also, sir, to get a little bit of understanding on your debt, from what I understand that most of your debt is working capital debt. So as you increase your top line, will there be a need to take additional debt?
Yeah. So today it's like more or less is all the working capital loans. The idea is like the focus more on the final bills because we are expecting close to 180, 190 crores of final bills. Last 6 months, if you see the trend, first 3 to 4 months during this year, we added almost 80 to 85 crores of additional debt because of liquidity pressure due to COVID, because there were some short of delays from the customers in terms of creation of the bills and all. But however, the trend has come down in the month of August, September and October. Because of that, the peak debt of 590 crores has come down to 550. Apart from that, we could able to accelerate some of our receivables and final bills. So today we have kept close to 170 crores of fixed deposits. Of that, close to 60-70 crores are free, which we can use for the system. So if you see, technically the net debt level has come down substantially. So the idea is to bring it down further, use if at all required for the growth from the final bills and the receivables, not from the borrowings. That is just the plan.
Okay. And sir, even if we consider a peak debt of 590 crores, your actual cost of debt is comparatively higher. Can I understand what leads to this higher cost of debt?
Yeah, sir, see, for our side of business, what is important also the bank non-fund limits. We had limits of close to 1,000 crores and we have increased to 1,400 crores. Of that, the utilization has gone up to 750 crores because our order book base has gone up. So that cost not only includes the interest cost, it also includes the BG commission, LC charges, and also renewal charges. Because the order book, which used to be 4,500 today, is touched to close to 7,000 crores. So because of that additional BG commission charges, LC charges, and renewal charges, and enhancement in the limits, that added additional cost.
Okay, great. And sir, I think FY19 annual report, you've mentioned that according to the capabilities, then you would concurrently be handling 55 sites plus 41 O&M projects. Is that capability still the same? Have you increased? How is it?
Sir, to be honest, if we exclude the O&M time, there was a time that where we used to work parallelly 70-75 projects. Now that number we have consciously brought down because we wanted to target now decent sized projects, not the smaller projects. So though we have the bandwidth to execute at a time 80-90 projects, excluding the O&M, but the strategy is to have 60 or 65 projects, not beyond that, or bring it down further, because the size of which we are thinking of maybe a decent level size may not be a smaller size. For example, like Yadadri, it's almost like 800 crores. Maitri, it's almost 840 crores. Bangladesh, then Nigeria is close to 500 crores. Okay, the quantum and the ticket size we are focusing so that the numbers should come down. So we focus more on limited projects. That is the idea.
Okay, great. Got it, sir. That's all from my side and wish you all the very best for the future. Thank you.
Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Pratiksha Daftari from Equitas. Please go ahead.
Thank you for the opportunity, sir. So I wanted to understand how does our execution compare on month-on-month basis, say from last 2 months for Q2 and now how is it improving this quarter, and also how are our collections playing out on month-on-month basis?
Yeah, madam, like if you see Q1, if I break into month-wise, April and May, the execution cycle used to be around 75 to 85 crores, and June it went up to 95 to 100 plus. But this traction moved to quarter two, it went up to on an average 110 crores per month. But whereas from if you see September was obviously it was slightly more as compared to previous months. But now we are seeing is this trend is moving to 160, 165 crores now. Maybe October we may end up October, November we may end up 171, 175. That we wanted to push it up to 220 crores. And thereafter it should go up because the order book is so strong that we need to even go beyond 250 crores.
Right. And how about collections, sir?
Collections, if you take the average for first quarter, it's close to 110 to 130 crores per month.
Okay.
Second quarter, it's around 155 to 165 crores.
Okay.
Third quarter, we're expecting close to 170 crores per month, and it should go up. So
Okay.
that front is good. If you see the collection to the execution, the collection is always better. That helped us to bring down the debt level.
Right. And so when it comes to our expenses, you said a lot of expenses. So what I understand is that our execution was not had slowed down, but our expenses remained more or less at same levels as compared to last year. So how much of these expenses would be one-off, and are we seeing any non-recurring expenses because of COVID or because of safety measures in Q3? Like how has that played out between Q2 and Q3?
Yeah. See, our experience being quarter one, we have brought down substantial deployment of the resources, assuming that COVID restrictions and so many other restrictions. Q2, we thought we'll have full swing execution cycle, assuming that we deployed the complete resources, but it ended up dip in the performance. So one is like the execution at 100% level, the deployment of the resources at 100% level, but execution is slightly lower than 85-90%. Now, if you break into recurring and non-recurring, we could say that the projects like which I was mentioning, like Maitri, Bhusawal, Ramanpet, and some of the international projects, the cost like remobilization plus the visa expenses, food, traveling, safety, and quarantine the staff. When the customer puts a set of team members into quarantine, that cost also has to be added to POWERMECH. Okay, so that
Right.
one-time cost itself, I'm sure it will not be less than 20-25 crores.
Right. So
Because
this
the
we don't
single
expect
Maitri
going
project,
ahead?
this we are expecting not to recur, because in Maitri, the single project itself, we spent close to 9 to 10 crores remobilizing, demobilizing, visa expenses, traveling, airfare. We have to do the airfare for flight tickets, everything. So that single project added almost like 8 to 9 crores.
Okay. Okay. And okay. And sir, if you could just give a little more, highlight on you mentioned about the key projects that are being executed, like say Maitri is 25% done and Yedadri is 12% done. So what kind of execution plans do we have for these projects in H2?
I think these projects, cycle time is 24 to 30 months we should take. Therefore, Maitri, for example, 860 crores, balance will be around 600 crores, next 1.5 years or 18 months, we have to finish this job. So that should give a measure of what should be the monthly, this one we should get it. And the Yedadri also, we have done just 12%, but a lot of resources have been deployed and a lot of inputs are available from customer. We have done around 85-90 crores, 700 crores is there. This we should finish it in the next 2 to 2.5 years. So that should take us around 20 to 25 crores per month on average. Of course, excluding retentions and other things. And then Bhusawal is going pretty well, 280 crores. And then Buxar, we have to start 176 crores. This is a project for about 30 months schedule. We are going to start in December end. Therefore, Dangote is doing pretty well. Perhaps by end of the year, we should complete this job because it is a short duration project but high value item, 550 crores. And then the JSW one project at Dolvi, we are completing it, 187 crores in the next 3-4 months. And balance work about 200 crores we have just taken up because there was a disruption in COVID, and then lot of manpower had to be demobilized, and now we are mobilizing it. And then this work we should take up in the next 1.5 years.
Right. Okay. Thank you, sir. I'll get back on the queue.
Thank you. Participants who wish to ask questions, please press star and 1 on your touchtone telephone. Ladies and gentlemen, to ask a question, please press star and 1. A reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Chirag Muchala from Nirmal Bang Equities. Please go ahead.
Yes, sir. Sir, firstly, sir, can you please provide the segmental order info specifically for Q2 and also the order book as on 30th September?
Yeah.
Segment-wise?
Segment-wise, the up to what we have captured is that ETC, 556 crores, O&M 262 crores, and then electrical we have not added anything, but civil and other miscellaneous items about 2,000 crores. That is what we have achieved. But that has taken us the backlog to 6,791 crores as on today. But we have not in this captured some of the orders which has come a little bit later, like Chapra T&D 70 crores, then JSW Steel 63 crores, and then Tata Steel, Bhushan Steel 70 crores O&M, and then Bara 3 into 6 megawatt O&M 100 crores. These are all in the, already orders have been received, but this we have to add to this 2,836 crores.
Okay, so sir, specifically as on, because sir, in the presentation, sir, you give data as on 13th November.
Yeah.
But that actually number does not exclude the execution of the 1.5 month that has already taken place. So to that extent, the order backlog actually is a slightly inflated number. So as on 30th September, is it possible to share the order book segment wise?
Yeah, see, 30th September, Chirag, the numbers remain more or less the same.
Same.
Yeah, we have not added the orders which Mr. Ramesh have added just now. We have not factored in the the presentation which we have shared because we have had to disclose to the stock exchange.
Yeah. So you are saying this 6792 crore order book and the respective segmental breakup would be same as on Q2 also?
Yeah, excluding the new orders which we have not added now, which Ramesh have told now.
Okay, sir. Yeah, and and sir, next on the margin outlook. So sir, for the H2, considering the fact that you are expecting the normalization to happen by Q4 and 85 to 90% in Q3, then what kind of Ebitda margin at the company level are we expecting for H2 of this year and also for the next year FY22?
See, 22 obviously it's going to be it's going to be our normal margins which we used to historically work on. Okay, for H2, of course, Q3 will be slightly a blended margin because it's a combination of good and bad. It will be little squeezed, but Q4 we're hoping that it should be close to our reported margins, which used to be around 11% plus. That is where we are working on it.
11% for FY22, you were saying?
Of Q4, okay, FY22 will be slightly more than that.
Okay. Yeah. And sir, on the balance sheet side, so considering the fact that execution would normalize, etc. So what is the outlook on the working capital position and also retention money by the end of the year?
In end of the year, The receivable maybe in the range of like, so if you take out the unbilled, it will be close to 75 to 80 days. And the retention money, which is close to 300 crores now, this is expected to come down to 270 or 275 crores.
Okay. Okay, sir, that's it from me. I'll join back in the queue.
Yeah, please.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1 on your touchtone telephone. Participants who wish to ask questions, please press star and 1. As there are no further questions, I'd like to hand the conference back to Mr. Chirag Muchala for closing comments.
Yeah, we thank the management for taking time out and sharing their valuable insights on this call, and we also thank all the participants for their presence. Sir, do you have any closing remarks?
Yeah, Ramay.
Yeah, thanks, Chirag. I think the focus now should shift on normalization of the operations, and then the order backlog has gone up, and it is further going to go up, because of the many opportunities which are fructifying it. And we are more bullish on the O&M sector because that has sustained in spite of the many setbacks we had in the first 2 quarters. It's still going steady. Perhaps we bring it fully normal and O&M backlog get up further. That should give us better margins and operations margins also. Now, coming back to the future a little bit, maybe the last quarter we should see the jump in the revenue close to 228 to 250 crores per month. And then that should sustain in the next year also. Therefore, as I earlier stated, 7,000 to 500 to 8,000 crores of order backlog, we are quite confident to achieve that. That should show an increase of almost 75% on the backlog of orders compared to last year. That should pose the challenge of how to improve the operations, utilization of sources, and a better deployment of the equipment and manpower. There can be some resource requirements, additional field labor, maybe another 20-30% we have to ramp up, and that should not be an issue. Perhaps the thing should be normal by that time. For we should hopefully look for a very good performance in the coming year based on the backlog which has been created, and hoping that normalization will restore. And by that time, the vaccine news which is good, should help us to get all the things normalized. For that is what we are hoping. Thanks, Chirag.
Thank you very much. On behalf of Nirmal Bang Equities, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.